What's going on, you guys? My name is Zach Hartley, and in this video I'm going to walk you through the 5 steps that you need to know in order to day trade or swing trade while you still work a full-time job and hopefully turn this into a full-time career. Here is everything you need to know. Let's go. Okay, so let's just jump right into it. Step number 1 is you need to open a practice account. This is going to give you $100,000 or $500,000 or $1 million in fake paper money that you can trade and you can execute with. If you're not familiar with the platform you're using, or you're looking for a platform, or you're trying to get used to actually day trading and making quick in and out trades like this, you need to set up a practice account. I still have a practice account after 7 years. I use it on a weekly basis, and you need to have one because it allows you to practice different strategies, to backtest your strategy, to basically try out anything that you want. The riskiest things, you can try it out in your paper account and see if it will work. It is definitely a tool that you want to have, because if you have any questions about trying out a specific type of order or a strategy or anything that has to do with the platform, do it in the practice account so that if you make a mistake or it doesn't work out the way you're expecting, it doesn't cost you anything. The second thing is, if you're new to trading, you need to use a practice account because it's much better to lose fake money than it is to lose your real money. Hopefully you're going to be profitable at some point, but the likelihood of you being profitable right off the bat is not very good. And therefore, if you can lose that money in the beginning in a fake money in a practice account, you're going to do much better in the long run because you're not going to have to claw back out of a hole. So I highly recommend a practice account to everybody. I've been trading for 7 years and I still have a practice account. Second thing is strategy. You need to have a strategy that you can basically communicate to me in 1 minute. If you can't tell me what your strategy is, then you don't have one, and you need to go back to the drawing board, because your strategy is going to be based on your time frame. You need to figure out, are you a day trader, are you a swing trader, or are you an investor that's buying in for the long term? And if you can't communicate it to me, you need to go back and refine it, because you need to be able to write it down, and you need to be able to talk about what gets you into a stock, what gets you out of a stock. What is your risk management strategy? How do you protect your downside? What is your position size going into every position? And then how are you going to diversify your portfolio if you are going to diversify? Now, this is definitely the hardest part, and if you're looking for some help with this, there's a couple of online courses that you can definitely sign up for. I highly recommend Zip Trader U, Learn Plan Profit, Stock Market Labs, and Warrior Trading. All of these guys are here on YouTube. They do an extremely good job, and they have a lot of great content. I also have my own course. It's hosted on Skillshare, which is kind of like the Netflix of courses, where you pay a subscription and you get access to everything. Mine's completely free for 2 weeks when you use the link down below, but we're going to talk about that a little bit later. I promise you, mine's mostly as good as everybody else's, but it won't cost you a single penny, which is really nice. Now, the step 3 is a trading journal. Before you get started actually executing these trades, I highly recommend you develop a trading journal, or you go out and buy one, or you build one yourself. There'll be links in the description for this as well, but a trading journal helps you track and document your performance. A trading journal helps you understand where you're good and where you're bad and where you can improve, so that over time you can refine your strategy and improve your results and your overall ROI. The trading journal helps you track your performance. The trading journal helps you refine your strategy over time. And this is what helps you figure out what works well and what you need to work on. Now, next thing is bracket orders. This is the meat and potatoes of the lesson here. This is what's super important. You need to absolutely master bracket orders, because as somebody that works full time, you cannot sit down at a computer for 4 hours a day, or sit there when the bell opens, or sit there and wait for the stock to get unhalted. You cannot afford to do that because you're working a full-time job. And so the solution to this is bracket orders, because these orders let you enter the stock as well as take profit and set a stop loss all in one basically transaction. It's pretty much 3 orders in one single transaction as you sit there on your computer. Now, the nice thing is you'll pay 1 commission to get into the stock, you'll pay 1 commission to get out of the stock, and then that third order will automatically cancel as soon as you're out of the position. So it's really, really nice. And the idea here is that you can set a bracket order at any break that you have, at your lunchtime, before you go to work, after you go to work, whatever your time period is, and whatever 15, 20, 10 minutes that you have in the day that you can sneak out, that you can look at a computer, that you can look at the charts. This is how you can do it. You can place a bracket order in that 10 or 15 minute order, and then you can place a trade that will basically execute on different parameters that will help you get in and out. Now, let's just take a real life example of this and take a look. So this is Apple stock today. I'm not going out and finding anything special. I'm actually looking at Apple stock today as I make this presentation. This is what the stock chart looks like. So let's say you're sitting at home before work, or you're sitting there on lunch break, you're looking at the Apple stock and you're saying, hey, this chart is starting to look pretty good. The price action just broke through my moving average. It looks like we have a pretty clear bounce off of support. The MACD looks like it just crossed over. The RSI is coming out of the oversold zone, and the volume has been increasing over the last 3 days. Those are all very, very bullish signs that would indicate that, hey, maybe this is a stock you want to own. On top of that, Apple just had record-breaking earnings. It was the first $100 billion quarter ever reported by a company. They're doing extremely well, and this is one of the best run companies in the world. And as you can see, we're breaking through the trend line as well. Everything is looking good on this stock. So if you're sitting there and you're thinking, okay, maybe I want to get into this stock when it breaks the previous high. So as you can see right here, right around 127, 128 here, we've got a previous high. And you may want to get in when you break this previous high, because that is going to be your confirmation of a trend reversal and a breakout of this stock. And you want to get into Apple and you want to capitalize on it for a swing trade up a little bit higher. So what you do in this situation is you place a bracket order. Now this is what it looks like on Questrade, and most of the platforms are going to be fairly similar to this, but some of the terminology might be just a little bit different. So we're looking at Apple stock right here in the top left. The quantity is 100 shares and the order type is a stop order. And I'm setting the stop order price at $129. When I place a stop order to buy the shares, what it's going to do is it is going to get me in when the price reaches $129. That's what I'm looking for, because I'm looking to get in as that stock continues and confirms my breakout. So the stop order here is going to get me in at $129, and GTC stands for good till close, which means this order is going to continue to exist even after the market closes today. It is going to be there until this order either executes or I get out of it. So that is the first order that you can see right here. The route is auto set to basically auto, and then here is my account, and then buy or sell. Now what I've done is I've clicked on this little check mark here, and this is the bracket order box, and this is what is going to allow me to place that take profit and stop loss order. And so when you break this down, you've got the profit on the top here, and it's almost always going to be a limit order. You can set whatever quantity of shares you can want it to be. For me, I'm going to leave it at 100 because that's going to take me out of the full position, and then I'm going to set the limit price at $139. This is going to give me $10 of upside per share, and that's how much my reward is on this trade. Now, the risk on this trade and where I'm going to set my loss or my stop loss is going to be right here. I'm going to set a stop loss order for 100 shares, and I'm going to set it at 124. So my risk on this trade is $5 per share. My reward on this trade is $10 per share. And then when I click on the buy button here and I actually place this order, it is going to simultaneously place all three orders at the exact same time. And if the stock decides to rise up past 129, it's going to get me into the trade. If it goes past 139, it's going to get me out of the trade. And if it gets into 129 and then drops to 124, that means that my analysis was wrong and it's going to get me out of the trade. And so this is exactly how you would place a bracket order. And the nice thing about this is that you can place this at any point. You can place it in the morning before the market opens. You can place it at lunch, on your break. You can place this whenever you want. And so you don't have to be sitting there watching the computer, watching the markets move up and down. You can literally just perform your analysis, do your due diligence, and then place this type of bracket order when you see the opportunity. That's the key here. And so when we look at this order back on the chart, this is what it looks like. So we've got our breakout level right here, right around 127, 128. That's where we want to enter. If it crosses 129, it gets us into the trade. You can see right here, it also gets us out of the trade at 139, which is right where we had the previous resistance. I might have to move this level just up a little bit, but you can see it gets us out right here. And then the stop loss is just below it at around 124 right here. And so this is what the actual system would look like on the stock chart. Now, in that last example, we were looking at the daily candle. So that would be more of a swing trading scenario. But the nice thing is that you can apply the exact same technical analysis, the same fundamentals, and the same order structure to the 1 minute candle if you wanted to do it on a day trading setup. So let's say you got in the morning and you wanted to buy it off the dip right here. You can see it double tested pretty much first thing in the morning. You could place that bracket order to buy it on the breakout of, let's say, the market open. You could get in, or you could do it on the confirmation right here. You could get in and you can ride that all out, and instead of using a stop loss, you could also change it to a trailing stop loss so that that stop loss moves up with your trade as the price moves up. So lots of different options here, but this is again Apple stock, and if you looked at this one, there was several different opportunities to trade it. So you could have got in early in the morning. We had another descending wedge right here, so we had a double tap of support right here. We had 3 lower highs in a row, and then basically all of our indicators fell apart, and you could have shorted the stock right here. You could have rode it all the way to the same support that there was at the beginning of the day. You could have bought the stock back here, and you could have rode it back up to some previous resistance from earlier in the day. So even just looking at the Apple stock right now, there's 3 different opportunities to get really good day trades in on this one. There's lots of different opportunities on stocks every day, and using the bracket order is how you're going to be able to time it based on your schedule, because you can place the bracket order at any point and it will only execute based on the parameters that you set. Now, here are my personal tips. When you are going to be doing this, I highly recommend you either keep a watch list or trade ETFs. The reason I recommend that is because it gets really nice and you can become more comfortable if you look at the same securities each and every single day. You start to understand how they move, what happens in the morning, how volatile they are, what becomes unusual action with them, so that you can recognize it, and you can only get that sort of familiarity when you start to look at the same stocks and the same ETFs each and every day. I also like ETFs because you can buy inverse ETFs and you can buy leveraged ETFs. So leveraged ETFs move much more drastically. They move in the same ratios, but they move much more dramatically up and down compared to regular ETFs. And leveraged ETFs allow you to trade in the opposite direction. So instead of having to short Apple and take on unlimited risk, you could buy a inverse ETF, and basically that way you don't have any shorting to do. So really, really nice options there. I also recommend that you set your bracket order when you have time, and then you just continue on with your work. You don't look at it, you let it execute either one way or the other. It's either a win or a loss, and then you document that in your trading journal. That is super, super important. And when you look at a chart or you look at a small watch list, it should only take you 10, 15, 20 minutes. If you're spending 20 minutes looking at one single stock chart trying to analyze it for the tiniest little minute details, you are spending too much time. You are not looking at the big enough picture. You're wasting your time and you're doing it wrong. Let me be the first one to tell you, you should be able to look at a stock and in under 2 or 3 minutes start pretty well understand what direction the stock is going in and how things are going. You might want to spend the next 2 or 3 minutes looking at the market, and then you make your decision, you make your execution. This should only take you 10 or 15 minutes to get in and out of at least one trade on a daily basis, especially if you're working a full-time job. This is going to be the best way to do it. And lastly, you need to track your performance. If you go in on a breakout or on a bounce trade every single time, you need to figure out which ones you do well on, which ones you do poorly on, so that you can adjust and refine that strategy over time. That's how you're going to get the best results. Now, if you're interested in opening a practice account or finding a new trading brokerage, definitely check out the links down below. There will be one for a 90-day free practice account with Questrade, as well as one for $50 in free commissions when you decide to open up a real account. I highly recommend Questrade, and I use it every single day for most of my trading. Now, if you're interested in finding a strategy and actually understanding how the markets work and how to find your entry and exit point, then definitely consider signing up for my stock market course that I mentioned earlier in this video. It is hosted on Skillshare, and like I said, it is completely free. When you use the link down below, it will give you a 2-week free trial of the entire Skillshare platform, so you can take not only my course but every other course on there completely free. Cancel your subscription at any point. My course is 9 hours long, so if you can do it in under 2 weeks, you get the entire thing for free. There's over 3,500 students that have already gone through the course, and there's over 200 reviews from people just like you that have given their honest feedback about what the experience was like. So I highly encourage you to read through the reviews. It is hosted on Skillshare, and there's a link in the description below. And if you guys get any value out of this video, remember to click that like and subscribe button. It sincerely helps me out, and I'll see you guys in the next one. Good luck trading. Good luck investing. Talk to you soon.